Hey, what is up, guys? This is Larry with Financial Lift, and today I want to talk about Gamestop, but I'm not necessarily going to just recap what happened in the past couple of days, but I want to broaden up the discussion and talk more about what should be done about it. Should we regulate the stock market more? Should we deregulate it? Whether or not it's unethical to manipulate the stock market or not, who's kind of in the right and who's kind of in the wrong. And if you know me at all, I'm not necessarily the type of person to basically try to convince someone one way or another. I like to view things from both sides of the perspective, see kind of the arguments on one side of the situation and see the arguments on the other side of the situation. I also really think it's important to really heavily understand some of the consequences of some of the actions we may be calling for, because I think right now there's pretty much a consensus that something has to be done. But I think it would come to a surprise to a lot of people that people are not necessarily on the same page on what has to be done. You know, even for example, there's kind of conservatives and liberals both being on the same sides that what hedge funds are doing right now are, unethical, or they're taking heavily amount of risk. But what should be done about it, I think people would be surprised to see that people have different perspectives or different outlooks on what should be done. For example, I think there's a lot of people that would say what the hedge funds have been doing, taking an extraordinary amount of risk, basically leveraging their money and having the potential to gain a lot of money, but also the potential to lose a lot of money, that, what they're doing is kind of unethical and extremely risky. But I also find it interesting because as individuals, you can buy stocks and you can leverage your money, you can buy it on margin and buy more stocks than the amount of money or capital you have. And yet I don't necessarily see people calling for action against that, but what hedge funds are doing that is kind of, unethical or something that should be regulated. And once again, this is not necessarily to make the argument one way or another. Another example of this would be, let's say people that are arguing that hedge funds manipulating the market is unethical. They shouldn't necessarily be doing that. They can call up their big buddies on, the NASDAQ market or Robinhood, and that they can basically influence the market with their other rich friends, and that's unfair. And so one of the things I want people to consider is, if we're calling for people to basically prevent, to make regulations that prevent people from manipulating the stock market, couldn't that have unintended consequences? AKA, you could make the same argument that the people on Wallstreetbets or on all, basically at this point, all forms of social media platforms, basically pushing up the price of GameStop. I mean, you have, huge influencers basically tweeting out there that they're buying GameStop and they're jumping on the ship as well. Couldn't you also make the argument that that's a form of manipulation? And I 100% agree that even what the hedge funds are doing compared to Wallstreetbets, even if you say that both are manipulative, you can still say that they are different and that for sure they're at different scales, at their different scope. At the end of the day, one of the things I think it's important for people to basically acknowledge is that both sides are playing the same game. Hedge funds, Wallstreetbets, individuals versus the rich. We're basically both sides of the same coin, or different sides of the same coin. And they were both playing everything up to our own advantage. So on the hedge fund side, they're going to make the argument that it's unfair what Wallstreetbets and basically all these retail investors are doing. That they're basically, it's a form of basically pushing the price up and then dumping the stock later, right? You're getting everybody hyped about a certain stock, you push the price up, and then at some point that stock price or that stock has to be sold at some point. I think that's something that a lot of people don't understand, is that at some point, GameStop is not necessarily just going to go to the moon. The price is not going to go to the moon and stay there. At some point, people are going to take those profits, and then eventually they're going to sell GameStop, and that's going to drive the price back down. Or even from GameStop's perspective, they have a way to basically issue more stock and basically capitalize on the fact that their stock price is so much higher than it was, even just a few weeks ago. This means that it's not necessarily a guarantee that everybody out there can just hold GameStop and profit off of that. At some point, some people are going to capitalize on the market and start to sell, and that's going to leave some people, even including individuals and as well as hedge funds, but including individuals that may not necessarily be too savvy, and they're going to lose out as well. And sure, you can make the whole argument that individuals should understand that risk, right? That they should understand that there's a potential to lose a lot of money. But when you have a lot of people hyping up a stock, you have to understand that there's going to be some uneducated investors that are going to basically jump on board, think this is the easy way to profit, off of the stock price, at the same time also kind of sticking it to the man in terms of hedge funds, and that they're going to buy into it not really understanding anything because they're just desperate, right? There's a lot of people right now unemployed, or that their wealth has decreased over the past couple of years. So they're looking for an opportunity to basically profit in an easy version, as well as take down some hedge funds along the way. And so there's going to be some people that buy the stock and not fully understand the risk, or fully understand that at some point the price has to come back down, and they're going to buy, let's say GameStop at $700, and it's going to hit $1,000 and they're thinking it's going to continue to go up. But the reality is people are going to start taking profits. They're going to start to sell. And then the stock price is going to jump back down to $500. And now this person lost a lot of money thinking that it was basically a guaranteed way to make money. And I also think it's a little bit of an interesting parallel that there's some people out there saying that, well, that's some of the inherent risk involved in retail trading. If you're an individual investor and you jump on board with GameStop and you don't fully understand the risk, that's your problem. And they understand the fact that by hyping up the stock, that's going to happen. That's bound to happen, that uneducated investors are going to put their life savings into GameStop. Then basically you're kind of acknowledging that you don't necessarily care too much that there may be some uneducated investors that are going to lose out on this whole entire situation. That, it justifies the means that you're going to profit, you're going to take down these hedge funds, but there's going to be some poor people or uneducated people that are going to lose out. But that's just kind of the price of what's happening. That's the price of the cost of the situation. And I think that kind of parallels with what hedge funds are doing, right? Hedge funds are basically trying to profit off of individual people. And yet, as a big group, yes, initially everybody is profiting in the short run, but at some point somebody's going to lose out because they don't fully understand the risk. And I guess to give a little credibility about what I'm talking about here, my background is in economics, as well as I have a master's that specializes in finance. And, I've worked as an auditor, as a financial analyst, so I understand a lot of these financial and economic concepts. And I understand that historically there's been a lot of action taken that has unintended consequence. And I always find it interesting that, a lot of people, especially right now, they're outraged that these hedge funds are basically using their rich buddies to basically manipulate the stock market. And so that their solution is to trust other rich people to take the right action. And I always kind of find that interesting because it's like, well, can you really trust these rich people that are politicians that are probably getting paid at some point? Can you really trust them to write regulations that aren't going to have loopholes? Of course they're going to have loopholes because they're buddy-buddy. So then that's where people start to kind of differ in what action should be taken. That's why I think a lot of people need to understand that there's inherent risk involved in taking action, that there's going to be some unintended consequences down the road that we may not have foreseen. So it's better to discuss it now, think about what some of those unintended consequences may be, and then try to write the correct policy or correct action from starting now. I think 2008 is kind of a good example of what I'm trying to illustrate. A lot of people were surprised that people didn't serve time after what happened in 2008, yet a lot of individuals lost a lot of their savings. Some people that were counting on savings for retirement had to go back to work, yet these hedge funds and these big banks ended up getting a big bailout. And it kind of gets to this idea of basically privatizing gains and socializing losses. So when a company loses money, they basically try to get the government to work with them in a way that basically redistributes that loss. But when it's basically gains, you can pretty much bet that the CEO is going to take all those gains, buy a new big boat or something like that. But yet you don't necessarily profit off of that. And what I'm trying to get at here is that I'm always surprised that other people are surprised by what happens when things are unfair. People are surprised by the actions taken by Robinhood and that they basically view that as very unfair and that they couldn't even have fathomed that Robinhood would take that action. But in my mind, I'm thinking, well, things that are unfair are always going to be unfair, right? To correct that action is never going to be easy because that's basically the very definition of something being unfair. If you try to make policy that basically works against big companies and tries to make things more fair, it's basically an uphill battle because if it wasn't, then it wouldn't have been unfair to begin with. See, I think when people are outraged, like a situation right now, a lot of people just want action and basically they're okay with it being very surface level type action. So what I could foresee happening right now is that in the next, it's obviously going to take the span of a few months, few years, there's going to be an investigation and then at some point there's going to be some type of policy written to basically make sure and deter hedge funds from doing the practices that they did. But I like to think about what are the unintended consequences that may happen. And here's a good example of that. These hedge funds and these rich billionaires, they're not necessarily just going to go down without a fight. And so they're going to become more sophisticated, just like with anything. If there's a lot at stake, they're going to find a way to basically make money one way or another. I think people kind of envision that there's going to be some kind of policy written that's basically going to prevent hedge funds from doing anything like they've been doing. And that they're basically at some point just going to cave and be like, you know what, you guys are right. Let's all try to redistribute the wealth. We've been against you for years, but all of a sudden now we're on board, and we're all on board on, redistributing our wealth, and that we're not necessarily going to try to find any other way to game the system. But I think about this. I think about this current situation and how heavily people relied on the other side, which is Wallstreetbets and these internet forums, or whether you're getting your financial advice from places like Twitter, and basically what that allows for in the long term. What's the long-term possible consequence? And I like to think that I'm sure these hedge funds are already, it's already been proven that they are playing around with using these manipulative social media type practices, basically trying to pump up and basically gain excitement through other stocks right now. So if you go on Twitter or if you go on Wallstreetbets, you'll see different posters that will basically say things like, this is the next big GameStop, jump on board with this. But basically they're just trying to detract away from GameStop. And so then I think right now it's a little bit apparent, but what's going to happen in the next few months? Is it going to be apparent that this is basically manipulative social media practices for hedge funds cleverly figuring out ways to push up other stock prices, or basically get the mass amount of retail investors out there on their side? And I think a lot of people's knee-jerk reaction right now is to basically assume that people are going to be smart enough to know whether or not it's a fake account or a bot account, or that they're just trying to, it's clearly a hedge fund trying to push up a certain stock price of a different stock that no one's really that interested in. That may be the case right now, but I kind of think about, well, if policies are written, because once again, people are calling for action, so there's a very surface level policy that's written that basically prevents hedge funds from manipulating the stock market right now the way that they're currently doing it. What are they going to do? They're going to try to find other avenues to basically keep making money, and they're going to become more sophisticated using social media to manipulate that. And I think people don't realize too that pretty much everybody's in agreement, whether it be 2020, 2016, whatever party you are. I believe that pretty much everybody's in agreement that social media platforms are basically ripe for people to be manipulated. That, we think we're sophisticated people enough to basically spot fake news or different things like that, but it's not. We're not. And clearly this type of social media manipulative type practice does work. And I start to think about what are the long-term consequences if hedge funds start to basically use that. And here's kind of a good example of what I'm talking about. And I'm not necessarily trying to put my tinfoil hat on right now or anything like that, but I'm just saying, what if this whole type of situation right now was basically generated by somebody that, basically it was somebody, some rich person that basically infiltrated Wallstreetbets and was like, you know what, I'm going to make some kind of enemy that basically everybody can get on board with, which are hedge funds and Wall Street, and that we're basically sticking it to them. So that's why you need to buy GameStop. I think that's something that a lot of people will get behind. And so, that's basically a way to kind of illustrate how easy it would be to basically manipulate people into buying a stock. And actually, if you look into this, there are stories in the past where there have been moderators of these different Reddit forums like Wallstreetbets being kind of paid off in one way or another. And that just basically illustrates that it is possible. It may not necessarily have been successful in the past, but I like to think, well, basically as more and more things are at stake and there's more money to be made manipulating these different internet forums into basically pushing up a stock price, that it basically, is bound to happen at some point down the road. Basically, I look at it the same version as far as cop versus robber, right? As the cop gets more sophisticated, the robber will figure out ways and different avenues to still make money, because at the end of the day, there's too much at stake for them. The same being true the other way. The cop's very nature is to basically figure out different avenues to basically shut the door on. And the same is basically true here. I basically look at, hedge funds and Wall Street basically as the big bully, right? The big bully, and that's not necessarily to get too opinionated here, but they're basically the big bully in school. And so what's the only way to beat the biggest, strongest person in school? Well, it's basically to use numbers to your advantage. And so basically both people are using what advantages are available to them. Wallstreetbets is using the one advantage they have right now, which is numbers. They have a lot of people that, maybe have $1 million portfolios, or even some people just have $500 here and there to invest. Some people even have $10 million to invest. And that they're using those numbers to generate a scale that basically can counterbalance this very small group of people, but they have an extraordinary amount of wealth and an extraordinary amount of funds available at their disposal. And I guess what I'm trying to get at is, sure, right now, Reddit, Wallstreetbets, these internet individuals may have won the battle this time against these hedge funds. But I like to think about what's going to be the next big battle, right? Because it's bound to happen at some other point. There's too much at stake. And so what's going to be the next battle that may end up having more spillover effects, right? Maybe these hedge funds end up trying to be more sophisticated on social media platforms to basically do a modern day version of pump and dump, which if you don't know what that is basically just generating a lot of hype, buying a stock, and once it hits a certain price point, because everybody starts to see that, oh, GameStop or AMC or different stocks are getting really high up in their price, maybe I need to jump on board at some point. And that's right at the time that these hedge funds start to sell. That's what they used to do in the past. It's kind of, it's basically illegal, but basically, like I'm saying, there's too much at stake, too much money to be made, that these hedge funds are going to find one way or another to basically game the system. Anyways, these are just kind of my rambling thoughts when it comes to GameStop, AMC, the situation right now going on with Robinhood, as well as these hedge fund managers. But like I said, I think it's really important to really just think about the unintended consequences of what may happen down the road. That way we can make the best decisions on the actual actions we should be taking place for the results that we actually want. If you actually stuck around this long, please hit that like button, because I'm sure there's a lot of people that are going to be a little bit triggered by some of the things I'm saying, because I think right now the consensus is basically just hate the hedge funds, don't necessarily, advocate for them, which I'm not necessarily saying I am advocating for them. My whole point is that what these individual retail investors are doing, perhaps that is leading to this other route or this other avenue that's just going to lead to a bigger scale way of manipulating people. And as always, I'd be curious on other people's thoughts. If you want to comment down below on your perspective on the current situation and what actions should be taking place, I'd be very curious to see other people's perspectives. And if you like personal finance videos, usually revolving around car buying, home buying, those types of personal finance type videos, and on occasion, like right now, talking about economic news, please hit that subscribe button. I hope to see you in the next one.